All right. Happy Monday. Welcome to Forex.Today. The YouTube community of more than 20,000, more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Why would we do that? Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. All right, so first of all, we have bond markets are closed today. Banks are closed today. So as a foreign exchange trader, we have to realize most of what we actually do involves bonds and banks, and that market is closed. Or those markets are closed. So you got to be careful. Meanwhile, we have the post-election rally, okay, which we planned on since January. Cool. So that's come to fruition. Very interesting. So we got these forces in play. Just realize as a currency trader, you don't have the normal flows that you would expect. And that is a risk. So be careful. Okay. Looking at the Kiwi here, not the greatest trade in the world, but we have had this set up for quite some time. And we're waiting for a breakout pullback. Okay. Haven't quite got the breakout, but you notice, I know it's hard to see, but if I adjust this, we got a retouch of the lower bound of this wedge, right? So we just might be trying to climb. Who knows? Kiwi's not the greatest currency in the moment, but it is not working. Interesting, huh? I know. Aussie, I'm interested in because we are riding the daily moving averages. What do you think of this? Yeah, could be an interesting opportunity. We have all the moving averages crossed up. Yes, we've had that giant pullback. Sure. Yeah, that's normal, especially after the election. We had the big move, some profit taking. Now, are you buying the dip or not? What's your move? Okay, so that might be an opportunity. It's interesting, isn't it? Oh, yeah. Oh, yeah. Okay. And it is sort of now we're using, the top side of the wedge as the support. See? So who knows? Now, of course, one more red day would end the up. But we haven't had that, so. Okay. What do you think about this one? Looking great. So you have the election pop, 618 Fibonacci retracement, or in this case, a 66% retracement. We should be on our way to the monthly R1. What do you stink? Smell like a plan? Okay. What do you think? Yeah. Okay. This is one of the trades we talked about last night in our day trading group, now known as the technical trading group. So, yeah, we're already 12 hours into this trade. Okay. So you have right? This is where we were when we met last night. Ooh, wait, my drawing tool's not working. Hang on. I know what it is. It's a Microsoft error. There it is. And I have to And now I got to bring it back up. Whoa, that's not what I asked it to do. What do I feel like trading synthetic indices? Why wouldn't I just trade the index itself? Or stick to Forex only? I don't think you should stick to Forex only. Forex is just money. Right? And money is used for the exchange of assets. So why would you ignore assets? Okay. So anyways, so we met last night in here, and we had already talked about this kind of pachow. So Suthu, Australia has iron ore and coal. Now these things can be used in the production of steel. So if a country somewhere around the world want to make steel, let's say China, okay? So let's put it there like China. If China wanted to buy steel, they could buy iron ore and coal from Australia. These are real assets, right? And there's a real intrinsic use. There's a real trade here. But China would have to buy Aussie dollar to pay for the product. So you're like, or should I just trade Forex only? Well, you could trade Aussie, but if China doesn't buy iron ore and coal from Australia, then Aussie won't move. So you could trade iron, right? Coal, steel, Aussie dollar. Okay, if the Australian economy is doing well because China's buying a lot of natural resources, maybe ASX is doing well. Okay, maybe they have a high interest rate. Okay, so you could have a carry trade. These are all different scenarios, like stick to Forex only. I like Forex in the United States because it has better taxation, and I could trade a lot of these things. So instead of trading iron ore and coal, I can just trade Aussie dollar and pick all that up. Okay, or I can trade the ASX and make some money as well. Now, if you are talking about these as synthetic indices because they're not really ASX futures contracts or something, then these are great. Because when it comes to, the value of the Australian stock market, well, it has a lot to do with foreign trade. Which foreign trade is Aussie dollar. Because if they're going to buy and sell products, goods and services in and out of Australia, then Aussie dollar goes out, Aussie dollar comes in, Aussie dollar goes out, and we call that the foreign exchange. What are they buying? Well, maybe they're buying TVs from China, but selling iron ore and coal to China. And so you want to look at trade balance. There was a time when Australia was actually importing more than they were exporting, And they're an export country, so that was terrible, and the Australian dollar was very weak. But I've also traded the Australian dollar when it was massively strong, paying high interest rates because they had high inflation, because of massive increases in the value of natural resources, which Australia sold. So stick to Forex only? I don't even know what that means. This is all money. It's all money. Gold is money. Oil is money. The stock market is money. The bond market is money. Okay, Suthu King? So the Australian stock market has gone up for a year. Okay? Why would you not want exposure to such a trade? Okay? It started the upward move in October. We got the 2155 cross in December, which means buy the dip in January, and you've been long since January. The goal is to make profitable trades with the least amount of risk possible. I need you to say that last part, the least amount of risk possible. Making money is easy. You can just gamble. I can put 100% on my account on a trade and double the account or go to zero. That's easy. So you got to add the least amount of risk possible. Take a look at Hong Kong. Such a great trade. Notice we hit the annual target, couldn't even go a point above it. You see? Isn't that just absolutely, totally amazing? In my mind, look at this. Look at the accuracy. In my mind, look at the accuracy here. There is 100% chance that institutional investors that trade the Hong Kong 50, aka the Chinese stock market, are using annual pivot points. 100% chance. That they had buy orders here, they had exit orders here. And look at this role reversal. Dude, seriously? Like, dude, clearly we got something going on here, right? What do you guys think? It's nice, isn't it? Well, what if Trump jacks up tariffs on China? Well, maybe this upward move is over, huh? Maybe. Okay. The biggest thing is, are you planning for that next year? Okay, what about the next 4 years? Hey, if Trump's going to jack up tariffs by 60%, couldn't you short the stock market in China for 4 years? I don't know. What's your intent? La, 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 la. Okay, what is your intent? Take a look at Japan. How's Japan doing? A little bit of vol, don't you stink? Yeah, we're at Nikkei 4,000 again. Okay. Cool, right? Yeah. Essentially Canada Day. Look at the drop all the way down to the yearly central. And then a complete recovery. Cool. Does anyone remember me saying that central bank intervention never works? What do you think? Sorry, excuse me. What do you think? Was that a key takeaway that you now own inside of your psyche? A gift that keeps on giving? That's right. And Denise makes the distinction, right? It's pretty easy to make something weak. It's easy to convince somebody to not do something versus make them do something, right? Thank you, Suthu. Make profitable trades with the least amount of risk possible. Yes. So anyway, as you can see, we climbed our way back. That is a dramatic move. We had a terrible month. And then we recovered. And now we're back at Nikkei 4,000. Yeah. And on top of that, a lot of like political stuff going on in Japan. It's a complicated trade, but it did behave in a logical fashion. And what do you think of the FTSE? Okay. Kind of a disaster, huh? It hasn't done anything this year. Okay. It topped out in April and has moved sideways for a year. The news to use, I suppose, is that we're at the bottom end of the range. Is there some hope for some up? Well, maybe. Maybe. Take a look at some Swissy pairs, eh, Brew? So, you have to decide if you are buying a dip. Are you kicking off the 21? Well, the 21 is below the 55, but can you draw the MACD? The MACD is below the waterline, but rising. Okay, somebody bought it right off the central pivot point, which gets us to our target. So what is your intent? I'd even go a little further. Now that we've actually created a range, are you going to buy it inside this range? Which means, are you buying tomorrow's pivot point? Wait, we're on tomorrow already? Yeah. Yeah, we are. Okay. So here this is what I was measuring. I'll make the adjustment. What's your plan, Stan? What do you think? Now, I'm bearish on the euro. I think Germany and France are in serious trouble. Okay. What about the dollar? Oh, Trump tariffs strengthened the dollar. Look what happened here. You ready? Oh my God, look at that. It's so right. And we've already hit Monday's targets. You see that? Already hit Monday's target. We're already done Monday. So what do I do next to predict the future? I do this. That's my jazz flute, by the way. Okay. I don't know. What do you think? It's so easy when everybody's trying to please me, baby. Okay, S&P, right? We're over the M3. It's plausible, like it could drop today. That's true. It's true. But the way that it looks like it's behaving over the last while is out of position trade. That gets us to 61.65 or 62, which I think is pretty gosh darn close to the projected high for the year. Oh my God. Probably not going to happen, I'd say, just because of the big move last week. It's just too spread out. So maybe 61, but 6,111 is probably has a good chance to be our annual high. Okay. Yeah. Gold getting crushed. Okay, we're through our line. I had one little line here, sort of like a last hope. Yeah, last hope dead. Last hope is dead. Okay, dollar's just ripper strong. Okay, dollar's ripper strong. Dollar is king. That's going to bring oil down. Drill, baby, drill. But it's a commodity priced in dollars. $1 buys more oil today than a week ago. $1 buys more gold than a week ago. We are through the daily moving averages. If you're a bull, you have to take a walk. Okay? One thing you could do is change your bias now to bearish. Okay? And that's that. And wait and change it when it becomes bullish again. There's not really much of a choice there. Okay, silver came up, hit the role reversal, which I clearly have outlined for you guys, and has gone bearish. So on this time frame, silver, I got a kill. Okay, it's like, remember, if it broke out, then I catch the pullback. Well, it didn't break out. It broke down. Yeah. So definitely some dollar strength going on, yo. It's real. Frank says maybe yearly profit taking. Maybe. Okay, so anyways, we'll keep an eye on that. Yeah, I mean, look, definitely bearish, huh? You can see the nice little setup here. Keep in mind, this is likely in response to the likely policy of the Trump administration. We don't know if this is down today or down for 4 years. Are you targeting 2,000? I mean, again, don't look at it as technical only. Try to thread this through fundamentals. Filter it through fundamentals. It could give you a sense of magnitude. Technical analysis doesn't tell you magnitude. It only tells you the price and the time. Doesn't tell you if gold is going to fall for 4 years. Take a look at the, right, where is it? There it is. This is my, the biggest one. So 12 hours ago, again, we met at the day trading group, now known as the technical trading group. And yeah, this is what we talked about, more dollar strength. So we had the big drop, the pullback, and look, I already had this drawn. I did this a while ago, huh? I suppose, because I was on the road last week. So we had the big move, the pullback, and now again, at the technical trading group last night, 12 hours ago, I asked people to think about this. Is it going to be down for a day or down for weeks? Okay, can you tell me the PMI for services and manufacturing in the EU? Does this impact the value of the euro? Oh yeah, because that impacts future central bank policy. And meanwhile, now we got Tariff Boy in charge. Okay, and this is what the reality is. Are you on it? How are Forex traders taxed in the United States? Well, if you're a corporation and you have trader tax status, then it's really favorable because the government treats your money in your account like inventory. So some of it is at long-term and others in short-term gains. It's a nice little mix. So anyways, guys, I hope you see the fundamentals here. I hope you're thinking longer term. I hope over the weekend you think about your, the next few months, the next few quarters, I think, right? Instead of just watching football and drinking beer, that you actually are starting to do some business planning for 2025, that you have an opinion on how the market's going to behave, how will Trump tariffs impact Forex, how will tax cuts and lower regulations impact the value of the stock market, who will benefit from 60% Chinese tariffs, and how does that impact the flow of capital? I mean, I hope you're thinking about these things above and beyond what your MACD is doing on the hourly chart. I really do. I hope you're taking time to step back and be the professional trader that you want to be. You have the data. So I hope you're making wise and informed investing decisions. You have the resources now. So like I asked you, do you know European PMI? Do you know, right? Do you know the US PMI? Yeah, I hope so. I hope you're taking time to go over the COT. I did that this morning for the fundamentals trading team. We've already gone through all of this. And again, I'm asking people to think forward. It's not just the stock, but where it'll be in the future. Right now, looking at the charts, we can see some weakness on the Mexican peso. Does that make sense? Yes, it does. Now, I wouldn't hold this long because you're going to get crushed by carrying costs, but could you day trade this up and get out before 5? Yes. Pound yen showing some weakness. Euro yen already weak. Well, that makes sense. Again, we already talked about this. This fits my fundamental bias for euro. USD Swiss franc going up, that totally makes sense. Buy a dip would be great. Okay. Kiwi yen, it's very hopeful because we know the bottom here was the bottom of my wedge. Okay. Aussie dollar, I was hoping, optimistic for. Maybe we can get that to turn bullish, but not against the US dollar. So you can see this bearish pattern here, right? A Gartley Fibonacci pattern. Obviously, this is bearish. If that's not obvious, please look at the description below the video. There's a free download. You download these flashcards. You can print them out. You can cut them out, and now you have a deck of cards that you can memorize, just like back in high school or even elementary school when you were learning your multiplication tables. Remember that? And you had little flashcards. Yeah, I had flashcards and an Apple IIe, the first generation to ever use a computer. Cool. Okay, so anyways, down makes tons of sense. So 6 hours ago, you were given a heads up. Hey, bro, you're at a sell point. Yeah, and it's working. Thank you, TRADARS. Love you, traders.com. I love you. Hard time frames on the yens do show some modest up. Modest up, right? Modest. Even CAD. So I'm happy to see this on higher time frames. And then, of course, rising wedge on USD CAD. CAD versus dollars just getting crushed. Dollar's a crusher right now. Oil's likely to come down. Why? Can you give me 3 words why oil's likely to come down? Anybody? In 3 words? Drill, baby, drill. So, what's your plan? Okay, you got tariff boy and drill, baby, drill. USD CAD up. Makes sense, right? Well, 3 days ago, you got the heads up. And it's just slowly happening. Okay, slowly happening. Okay. Still has, right? Are we going to get through 140? Maybe. But that's the plan, isn't it? Yeah, that is the plan. So, if you're part of the news trading team or the pro team, you have access to the scalping tab. Okay? And you'll see that today, tonight at 7:30, okay, we have Aussie news. Then we have UK news tomorrow. Then we have, right, the German zoo. Great. CPI Wednesday, PPI Thursday. Japanese GDP Thursday night. UK GDP Friday. Retail sales going to be huge, bruh. Okay. So make sure you're taking some time and planning this out, planning your week out. Remember, the whole point of this is we looked at hundreds of different news events. These are the only ones that matter this week. Okay. Pro members have access to the scalping radar. Pro members have access to the implied volatility radar. And the new one, I forgot about that. I haven't released it yet. I don't even remember what I called it. Oh my God. I don't even remember what I called it. So I have a prototype, if you will, and I might release it because it's good. It's not great, but it's good. I showed it to somebody. But what we do now is have AI read the news for you. Not this one. Okay, not this one. I'm going to launch this one soon too. This one reads the headlines like a squawk. We have our calendar, which is a real-time calendar. So in 8 hours and 29 minutes, okay, we have Aussie news. Okay, we have real-time pattern recognition. So here's the one where you short the Mexican peso, right? Okay, great. But there's a new one that actually reads the news from like as much as maybe 12 different sources. So like it reads the news at FX Street, for example, and organizes the sentiment of the news, the tone of the news, by asset class. And that's a new feature that I'm going to launch. And I don't think it's gonna, no, I don't have it here in my memory. But it's we have it. It's not pretty. It's not really searchable. It doesn't organize very well, but it works. So you might find, let's say, in the last couple of weeks, 12 articles that are negative on the Australian dollar. Isn't that neat? Would you guys like to see it? Should I take a minute to log into the back end and find it? Would anybody like to see it? Yeah? Wait, Jim, I think you've seen it already. He's like, I'm just trying to help you out. I mean, like, yeah, if people don't care, I mean, that's what I'm getting at. You guys are so nice. Yeah, I know. You guys are so nice, like nice to a fault, but that's a good fault to have, huh? All right. Let me, I gotta find pages. How did I build it? I think it's in here. Yeah, I didn't even name it properly yet. That's how rough it is. That's why I didn't find it. Let's see if I can preview it. Oh, it's happening. All right. Yeah, all right. Yeah, I haven't even named it properly. Let's see. Let me open this up. And I'll show you. So Euro Pound has a negative score in the press. I must let you know this is not fundamental. It's not technical. Okay. Now, one website has mentioned Euro Pound negatively 14 times. So, FX Street. Okay. So 14 articles on FX Street over the last 30 days are negative. So you're like, okay, that's only one source. How about Lyft? Lyft, look at all the sources. It's cool, right? Look at that. Isn't that crazy? 21 sources, news articles. We read these articles and they have almost very positive outlooks. Or sentiment, just sentiment. Yeah, it's just sentiment. I don't even know if it's an outlook. It feels good on the whole. Gold, okay. Let it load. Go over the last 30 days. Is it loading? See, it's a little clunky, huh? Come on, gold. Try it again. 90 mentions, though. It's not loading. See, it's a little clunky. We're getting there, Bubba. Maybe it needs some time. I don't know. But anyways, 5 sources wrote 90 articles, and they're quite negative. Let's see if we can get silver. Okay, and now look how we people were very positive, okay, very positive on silver. And then around the 21st of the month, the articles became less and less favorable and now is negative. Isn't that cool? No, it's not going to be, no, there's no major updates coming as far as sortable and all that kind of stuff. Now, what you can do is you can make them a favorite, for example. So euro dollar has a negative score. Oops, there, okay. Here are the sources. This is a 7-day rolling average, 8 sources, 56 articles, and a negative sentiment in the articles. And you can see how it's changed and collapsed again. Okay, and this is our sentiment score, reading the news. Over time, the score has changed. Okay, what do you think? Is it hopeful? Is it okay? Is it hopeful? Like there's Tesla, and, we got quite a few, but not really. It's not perfect by any means. Like I can't say don't give me stocks and stuff. It's complicated because we'd have to do that at the database level. But you got stuff. Can you organize it by score? No. Can you organize it? No. Can you do it by name? No. But it's something. I mean, are you guys okay that it's now TRADARS.com will now read the news and aggregate the news on your behalf? And see if gold will open up this time. Okay, it read 5 articles for you over the last week. What do you guys think about that? Seriously, it's an interesting concept, isn't it? Okay. 90 mentions. Okay. Five different websites wrote about gold over the last 70 days, mentioned gold in the articles 90 times, and through the magic of AI, negative 55. Okay. So I encourage you to become a pro member. So I'll launch this week. If I should, I have a lot of catch up work to do from being gone. So here, like I can favor this. Okay. So this is the only way that is sort of, filterable. So you can, if you're a Forex gal, okay, and maybe it helps it come up. I'm not sure what it actually is doing, but you could do that. Then we have all these individual type stocks too, right? And so you're building sort of your hit list. Utilities, healthcare. So it's keeping the currencies on the list is what it's doing. You see that? Okay. So it just gives you the biggest winners and losers first. That's all. It's kind of the way to handle it, huh? Okay. I don't know. So I'll get around to launching it. Yeah. At least I'll just give it to you, right? I'll just pop it on here. Great for the news, right? And then, of course, I have to launch the news feed. And I'm going to try to get to that. I have to meet with the developers. They've been working on an upgrade. A kickstart look at the Euro US dollar, US dollar yen, and pound US dollar from a technical perspective.
NASDAQ touches a record at the open, then gives it back as Nvidia slides.
Gold plummets amid stronger US dollar Trump effect.
Copper views Trump win through Chinese lens. Andy home. OPEC's in trouble. TDS.
Pound US dollar price forecast stumbles below 1.2900 on risk-off mood.
Mexican peso declines on rumors of Lighthizer appointment.
US dollar Canadian dollar strives to break above 1.3950 as US dollar soars.
US dollar pierces through resistance in low-volume trading conditions on Monday. Crude oil slides on Trump asking for a solution on Ukraine.
Cool, right? Now, I don't know why I did that. I screwed up the calendar, and I don't know why.
Oil falls as China stimulus fails to boost sentiment. US dollar rises.
It's cool, right? So I'm going to launch that because we've been working this update to read the charts and to read not just the headlines, but actually the news. Let's see if I can get this better. November all the way to December 31st. No. There we go. Oh, no, it's already way back. See, I'm screwing this up. But anyways, yeah, we have a very interesting upgrade that they've worked way too long on, charged me way too much money. Maybe I'm getting scammed. But we are working on this upgrade, and then I just want to get it done and get it launched. But now I have server issues, so I need someone to set up my server properly and then have this running. And so maybe by this week or next week, we'll get this running on YouTube 24 hours a day, 7 days a week. Certainly worth $100 a month, and I'm going to give it away for free. But I've spent like way too much money on it so far. So maybe that'll change. Okay. Maybe that'll change. We'll see. But that's the plan anyways. So lots of more upgrades, more and more and more upgrades. I hope you feel over the last couple of years of running Quantbox and now traders.com that there's a steady flow of upgrades. More and more and more money being reinvested into something that gets gooder and gooder. Okay. Just go to the community. Oh, I should probably go to webinars. Okay. We have Peter Ward today. Then Jessica. And then me. So there's still 3, maybe 4 hours of performance coaching today. More. Okay. And yeah, and we've already had my early one today and then this one. So, that's 5, almost 6 hours of performance coaching just today. If you include last night in a 24-hour period, yeah, definitely pushing 7 hours of performance coaching in one day. That's not bad in a 24-hour period. That ain't bad. In fact, that's phenomenal, isn't it? So anyways, cool. Thank you for your patience with me. I was at the St. Louis Fed last week. That went really well. I crushed it at the podium. Did my job. People liked it. I've been invited back. So couldn't be happier. That worked out great. So I'm looking forward to a great week. And, I encourage you to become a subscriber, not just to the Traders community, but to the TRADARS, platform. Okay. It's a platform of fundamental and technical analysis. It's pretty impressive stuff. So I encourage you to stop trading like an amateur and start making all your trades based on logic and intelligence. That's what TRADARS does. So peace on earth. May the pips be with you. May your profits be above average. I hope to see you very soon. Cheers.